That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Dave Mazza, as well as Yahoo Finance's very own Jared Blickery, joining us here to break down the moves in today's trade. Jared, let's start with you on that close.
All right. Well, we got a few record highs to talk about. First, the S&P 500 here up 0.75%. Also, the NASDAQ Composite closing over 21,000. I believe that's the first time for that one. And the NASDAQ 100 as well above 23,000. And for the first time of 2025, we have a record high for the S&P 500 equal weighted index. A lot of people out there might have thought I was going to say the Dow, but that was not the case because we missed it by a whopping 4 points there. So a nail biter finish for the Dow, missing that all-time closing high record by just a few points, but nevertheless 1% gains for the day. So that is a nice total for a low volatility bull market. And here's the sector action. Much like yesterday, we have only one sector in the red, but instead of tech, today it is utilities. And utilities had been on a 3 or 4 day tear, closing at record highs for several of those, but not today. Healthcare in the forefront, that was up 2%, followed by industrials and energy, all three of those outperforming today. And let's take a look at the NASDAQ 100, get a read on the mega caps. NVIDIA up 2.25%, Meta up 1%, Broadcom almost 2%. And we're going to be focusing on Alphabet and Tesla after the close for those earnings. Alphabet down about 0.5%, Tesla up just barely. Also notable, Palantir up almost 4%, and AstraZeneca up 3%. Oh, by the way, look at Texas Instruments down 13.34%. That was the worst day in a while for Texas Instrument, the chip maker. And here's a look at the Dow. We have Visa up 1%, Goldman Sachs up 2.5%, McDonald's, though, to the downside about 1/3%. Same for Verizon, and Apple just slightly down about 12 basis points there. And focusing on the leaders today, we had small oil in the top spot, and then ITA. That is iShares U.S. Aerospace and Defense ETF has the most record highs this year, and I'm not sure if that's one, but that has been a leader so far. Now, let's throw it back to you guys.
Thank you, Jared. Dave Mazza, your quick thoughts on today's trade. Trade deals front and center, fueling optimism, green everywhere, Dave.
Yeah, no, it's hard to find a lot of red today, as Jared was noting. And I think today's trade deal optimism continues to show sort of what the market is trading on, right? So again, we've ignored a lot of the potential bad news that could come from tariffs. There's still a lot of deals that still need to be negotiated, but for the time being, we're not getting worst case scenarios. We're getting deals being done. Markets are cheering that. And at the same time, and we got some two big ones today to help kind of set the stage, early earnings thus far have been stronger than expected. And I think, investors are cheering on that and really setting aside the fact that there's still some question marks out there.
All right, Alphabet's second quarter earnings, they are just crossed the wire, so let's get you those results. Q2 EPS 231 versus an estimate of 218. It looks like revenue $96.43 billion versus an estimate of $93.97 billion. I'm just looking at Google ad revenue, $71.34 billion. The estimate was $69.71 billion. Turning to different segments, Google Cloud revenue, $13.62 billion. Estimate was $13.14 billion. YouTube ads revenue clocks in at $9.8 billion. Street was closer to $9.56 billion. Also looking ahead, they are seeing full year CapEx. They're now looking for about $85 billion. They had seen about $75 billion, and the street consensus was more like $73 billion. Just looking at how we're getting instant reaction here in the after hours. Remember, this stock was basically flat year to date heading into this print. Right now, down about 0.5%. Dave, you're looking over these headlines like I am. Your immediate response, Dave.
Yeah, no, so I was looking at their actual reaction to the stock, and at first it looked to be positive. To your point, as you're going through the headlines, sort of the top line numbers look pretty strong. But then when you kind of, begin to peel back the onion, and we'll need to see more to come on the call, that CapEx spend number coming in, well above street expectations and what was previously guidance, is definitely a bit concerning, especially when, we're seeing nice growth from important segments of the company. but not necessarily gangbusters.
It's interesting, Dave, because heading into this print, like I said, you were basically flat year to date. Couple different issues. One was AI search, right, and where they are in this AI market. The others was this monopoly lawsuit. It does seem like we'll have some immediate questions, though, about this CapEx number, Dave. Again, it looks like we're looking for full year CapEx. Now they're calling for about 85 billion. They had seen 75. The estimate was 73.
Yeah, no, exactly right. I think in general, the question that we've had heading into this earnings season, and I think it's we're not alone here, is just how much CapEx is going to continue to come, right? So this is an arms race, right? We're still in the very early days of building out data centers, building large language models. At some point, though, there's going to be a preference that either corporations have or consumers have on sort of what AI models they want to use and how does that sort of all play out. But for the time being, every company needs to continue to plow ahead here. But seeing sort of, I'm going to be very curious to see, well, what exactly are they planning to spend this on? Is there something new? Because again, we still don't really know exactly what's going to happen with that monopoly lawsuit and the impact that could have, to Chrome.
Some more headlines coming out, Dave. They talk about how cloud annual revenue run rate over 50 billion. Of course, in that space, they're competing with the heavyweights like Amazon, like Microsoft. They talk about how they continue to see strong performance in YouTube. They talk about how AI is positively impacting every part of the business. I mean, the worry there, Dave, one concern has been about how AI will impact search, will impact Google's bread and butter. How do you think about that dynamic?
Well, I think that, again, they're a company that sort of has the ability to sort of integrate AI into a lot of different operations, right? So they are not, Alphabet's not a pure play company, right? So obviously we know that it's dominated by search and sort of the ad revenue there, but YouTube has been a really bright star for it for some time now, and the ad revenue that can come from there. And if you can begin to integrate AI into sort of those products and systems, it's going to make their business benefit pretty markedly. But at the same time, they face this existential threat of, is there going to be something new, the new when it comes to search, right? I know, like a lot of folks, I'm using ChatGPT and other tools above a browser more and more. And at some point, that's going to have to kind of come to bite them. But that's why they're kind of really so focused on sort of integrating Gemini into all of their different products and offerings.
Dan, I want to bring you in here as well, get your reaction to these results. The immediate reaction, Dan, from investors, at least here in the after hours, we seem to have some disappointment. The stock's down about 2.5%.
I missed that.
Hey, Dan, you got me?
Yeah, I got you.
Just your immediate thoughts and reaction to the results, Dan, with the stock under some pressure here, at least initially.
Yeah, it looks like it's that CapEx spending, that extra $10 billion that we're seeing from the company. There's also, they saw the growth on both the cloud side as well as on the advertising side. I think the positive AI commentary is important given that they're expanding that CapEx. But, as you guys are talking about, there's no real understanding as to where that extra spending is coming from. Is it because of tariffs? Is it because of something else along those lines? Are they investing more into other companies? Obviously they had purchased Windsurf, got in on that. So is it more along those lines? Is it the hiring? Where is this spending going? I think that's where people really want to know what's going on.
All right, Dan, good questions. We have just the man to talk to about it. Coming up to talk more about these earnings, we've got the analyst Rohit Kulkarni is here with us to talk more about that. Rohit, the at least the initial reaction here after hours, stock's at about 2%. As Dan was just mentioning there, Alphabet sees CapEx, full year CapEx about 85 billion, Rohit. They had seen about 75 billion. The street, I don't know where you were, Rohit, was more like 73 billion. What do you make of the results? What do you make of the reaction so far in the after hours?
I think fundamentally, I think we are seeing acceleration in revenues in a very large company. Google search is accelerating, YouTube growth has accelerated, Google Cloud has accelerated, and even subscriptions have accelerated. We agree that last Q2 there was slowdown, but they are compensating for acceleration, and we are not seeing any sign of existential issues that investors have been focused on as far as AI search is concerned, or what ChatGPT attention is taking away from Google. Having said that, I think the stock reaction here is a knee-jerk reaction about where are you going to spend those extra $10 billion? And what is the ROI that you're seeing from the existing spend? That's a sentiment that probably drives a lot of other mega caps, in my opinion, Josh, where Google is probably generating the most amount of cash and they have the cushion to spend that cash. But we would love to know, is this an indication of supply chain constraints are easing up, that more chips, more power, more data center room is available, so they're able to spend more this year? Or is there something new or fresh from an investing standpoint that they have found?
So Rohit, when that question is asked on the conference call about this CapEx, about 85 billion, they had seen about 75 billion. What do you think they're going to say to that, Rohit? How will they explain it, do you think?
In my opinion, what they will cite as a kind of proof point number one is, look at our results. Our results show acceleration in advertising revenues, in cloud revenues, and if we are seeing acceleration, it's because of some of the investments that we did over the last 12 to 18 months, and the investments that we are planning to do more of. Those same investments give us more confidence of a bigger return over the next 12 to 18 months. I feel that this is a show me quarter that everyone was piling on Google about fundamentals showing any signs of cracking from a revenue standpoint, and we haven't seen that at all. I think from a revenue upside, this was as comprehensive of a revenue beat as we have seen from Google in the recent past.
You know, other big tech names, Rohit, I'm thinking about Meta. Now, they'll spend, but some of your colleagues on the street, Rohit, they'll say, well, we like that spending because we can see where it's positively impacting results. Talk about users and advertisers. Yep. Would you say the same about Alphabet?
It is, although we don't have a full disclosure in terms of what it is actually helping from a usage engagement and all the things that we want to see. But from a revenue standpoint, yes, I think, Josh, objectively speaking, revenues are growing faster than what we would have expected. That's translating to higher earnings and more operating cash flow. So overall, I would be buyer on this weakness. I think valuation remains reasonable, although it's a pulse on sentiment.
All right, we lost Rohit there. We appreciate his instant analysis and reaction, as always. Let's move on to another big name, which is just hitting the wires here. Tesla, its second quarter results just hitting the wires, so let's get those as well. It looks like we have Q2 adjusted EPS. I'm seeing 40 cents versus an estimate of 42 cents. It looks like Q2 gross margins, I'm seeing hit the wires at 17.2%. Looks like the estimate was more like 16.5%. Q2 operating income, 923 million. The estimate was 1.23 billion. Some headlines hitting as well. Plans for new vehicles launched in 2025 remain on track. Another headline, Cybercab scheduled for volume production starting in 2026. At least initially here, stock looks up about 0.7%. Dave Mazza, you're watching these headlines as well, coming fast and furious. What do you make so far of what you see?
Yeah, I mean, from the top level, we didn't sort of achieve expectations from at least consensus standpoint in some areas. So maybe you'd view that sort of as a negative. But on the other hand, we sort of all know that those numbers weren't necessarily going to come in great anyway. So I'm not sure if investors, probably unless it was a horrible number, are going to, for the time being, sort of keep the stock flat or bid it up until we get to the call, where then we can really diagnose what's actually going on here. But looking sort of at least at numbers that have come through thus far, margins don't look horrible, at least sort of relative to, again, worst case whisper expectations. So I think that's generally a positive at the same time.
The print's so important, but as you rightfully note, Dave, also Elon Musk comments on the call will be very important as well. What would be top of mind on that call for you, Dave? Is it how he talks about EVs and deliveries? Is it about the new affordable vehicles on the way? Is it about the Robotaxi service? What would be on your radar?
Yeah, so if I was going to kind of go through and characterize what's most important, right? So we know that vehicle sales are challenged, right? So, but if can we actually get some clarity? When are we going to have a lower price model come, right? Because in the absence of that, I think it's really a struggle to see where new buyers in this existing lineup is going to come from. And to be quite honest, getting a little stale. It would be great to hear a little bit more about Cybertruck too. Those sales have been way below what at least Musk had forecasted or sort of guided that we could see. And then, let's pivot to Robotaxi. That's where a lot of the multiple or growth multiple is still baked into this stock. We know that there's finally been a rollout there, albeit with some challenges, but maybe to be expected with anything. Are we going to then know when are other markets going to come on board? When are we going to have that happen? Then what's going on with FSD? Is there going to be progress there? When can we see that? And then, of course, anything else that's relevant are kind of these smaller areas, right? Of course, Optimus, are we going to have some clarity? Is that going to come to market? And then sort of what's happening on power generation, which has sort of been a pocket of strength for Tesla, but hasn't gotten a lot of attention because it's still pretty small compared to how they actually make money today.
In terms of that core EV business, Dave, which still does drive the P&L and deliveries, we talked to Bulls on the show recently, and the reason in part they're constructive about their EV business is they say, listen, they like that revamped Model Y, they like that new, relatively more affordable model on the way, and that leaves them positive. Do you share that optimism?
So we're generally still bullish on Tesla, but sort of different reasons, right? So one of which is in our humanoid robotics ETF. Tesla's an important component of that because of what we believe over the longer term Optimus could bring to that space. But that's sort of a kind of a more thematic trade when it comes to Tesla. But the reality is the core business has been challenged and continues to be challenged. A real question that sort of we have is, even coupled with the same time, sort of the dream premium that could come from these new areas is, well, who really, if we don't have the tax credits, are we going to have a model that's either cheap enough or exciting enough to get people to buy EVs or buy particularly Tesla EVs? And to date, we haven't necessarily seen that. That's why I think it's so important that they're going to be able to provide some great, or have the ability to provide greater clarity of when these milestones are actually going to happen. Because broadly speaking, investors have started, even some of the bulls there have kind of woken up to what I'd call some of the antics when it comes to Tesla and sort of their over-promising and chronically under-delivering. If we can even sort of get a little bit closer on that, I think that's actually probably bullish for the stock, as crazy as that may sound.
All right, we'll see what Musk has to say on the call. We're going to talk a lot more about Tesla, of course, coming up. Stick around. Much more market domination overtime. It's coming up. All right, while Tesla reports a miss on second quarter earnings, investors keeping a close eye, we know, on Robotaxi adoption as the autonomous race heats up. Director of Research, Autonomous Technology, and Robotics at ARK Invest, got Sam Korus joining us now with more. Sam, it is great to see you. So the Tesla numbers are out. Stock's about 1% right now in the after hours. Of course, waiting for the call with Mr. Musk. But your immediate reaction to the results, Sam, what do you make of them?
I mean, I think there wasn't too much of a surprise here. What people were looking for was probably the low-cost vehicle, which they mentioned coming out in June. They spoke about that. But that's really, I think, more of a short-term thing here. The biggest thing that everyone's watching is Robotaxi, and I think that is the right thing to be watching. You have the launch in Austin. I think it's pretty remarkable. They've launched it. If there was anything that happened, it would have been over all of the headlines. It's been pretty quiet, even as they've expanded. That's great. In our longer-term forecast, done with the whole team here, Tasha Keeney, Daniel McGuire, this is for 2029, a $2,600 price target. 90% of that enterprise value is coming from Robotaxi. So we think, they're launching a low price vehicle, but the real story is Robotaxi. And I think that's what everyone's going to be listening for on the earnings call later on.
Listen, you are absolutely right in terms of the interest, Sam, and the excitement on part of a lot of investors about that service. It's small right now, though, Sam, right? And limited. How quickly do you think Musk can scale that service? How quickly does that service expand?
Sure. I think it expands incredibly rapidly. Elon's said millions of vehicles end of next year. I think it's worth taking a step back and just saying, why can this scale so quickly? Do people want it? If you look, Mary Meeker put out a slide of Waymo in the San Francisco area. And even though it's more expensive than Uber and Lyft, it's already starting to take share. And there are a lot of reasons why Tesla should be able to offer this for a lower price than Waymo, right? They're using vision only, so their vehicle's less expensive. They have an adaptable fleet, so they can meet peak trough demand without having underutilized vehicles. And they've got manufacturing scale. They don't need to, negotiate with these automakers. And at the end of the day, people are going to look at an app and say, I can get from point A to point B for less money. I'm all in on this. I'm going to do this. And then you have Tesla's manufacturing capability, right? They're able to produce roughly 5,000 cars a day. That's already double the size of Waymo's entire fleet. So as this scales, as they prove out the safety, continue to validate that, one, you should have regulators who are welcoming this into their cities because it's going to save lives and be better for the people living there. And then you have Tesla delivering on the manufacturing side. So as this continues to work, the scale should not be the issue.
And when does this become a money-making business, Sam? As you try to model that out, what is a timeline?
Yeah, and on this, Elon's mentioned it. I'm sure we'll get updates here as well. There's always, the elbow of the curve of adoption is often referenced here. So it's hard to pinpoint exactly on an exponential curve. But I think within the next 2 years, this really starts to take off and make a difference. I think, Tesla will be saying it, whether people believe it or not. I think it's really going to hit people when Uber or Lyft comes out and says, we've lost share in this area, and there's only going to be one reason for that, and that's likely because of a Robotaxi that's scaling there.
Sam, great to see you and to have you on the show. Thanks as always for your time.
Thanks, Josh.
Well, Tesla just reporting second quarter results as investors scope out the winding road ahead for the EV maker. What does this mean for exchange-traded funds with exposure to Tesla? For more, let's welcome back in now Roundhill's Dave Mazza. Broader question, Dave, and you are the man to ask this. You have, of course, the Mag 7 ETF there, Dave, and Tesla's, of course, part of that. I am curious, what has investor interest, Dave, generally been like in the mags right now? What have inflows look like?
Yeah, it's actually interesting. And obviously we're biased managing the Magnificent 7 ETF, but it actually has become sort of, I think, a great gauge of sort of near-term market sentiment, the inflows and outflows, the trading volume, the option volume of the MAGS ETF. And so starting the year, there was a huge flood of capital coming into MAGS, really being built off of the heels of its great performance in the previous year. More recently, sort of over the last month, that softened and actually we saw outflows. In the last week, though, we've seen inflows. So what I would say net, so what did I say? Inflows, outflows, and inflows. Definitely investors in MAGS kind of put a lot of capital to work early. There was a huge hit, with DeepSeek Liberation Day. So we didn't necessarily see that plow back in until recently. But heading into earnings season, I do think investors got a little bit more bullish than we have been in for some time, especially as the price, begins to flirt with its all-time highs. And we know that the MAGS and the Magnificent 7 were laggards for the better part of this year.
Mag 7, of course, Dave, front and center for investors. It is interesting, though, Dave, how much on this show we're talking about names like Palantir, Dave, how much we're talking about Coinbase. Do you see other tech names starting to move in here on the Mag 7?
Well, it's interesting. I think there's probably a case to be said that there is sort of another wave of Magnificent 7 type companies. They don't necessarily have that huge size, multi-trillion-dollar market caps, but they're certainly sort of interest to investors and have that sort of hyper growth profile. But at the same time, for the most part, and we'll have to get through this earnings season to see, one of the reasons why the Magnificent 7 have remained at large, right? Not every company at any given point in time so dominant is because their revenue numbers are astronomically high and they're still growing. So we haven't necessarily seen signs of that cracking, maybe absent Tesla, to be quite honest, and some of the questions and challenging there, because at the end of the day, they're an auto business. But for the time being, they continue to produce outsized revenue, outsized earnings growth. operating income growth. And that's why I think investors, for the most part, are staying put in the names.
A big thank you to Dave Mazza for hanging me with this afternoon. Dave, you were so helpful on the show breaking down those earnings. We appreciate the instant analysis, the insight. Any final thoughts, Dave, for the viewers?
Well, I think it's interesting. So we got two names coming out today. There's still a lot to get through in this earnings season, but that CapEx number, super important for Alphabet. I'm going to be looking for more information there. But it looks like NVIDIA and Broadcom are definitely happy to see that. So a little second derivative are already at play here.